Hey everybody, we are down in beautiful, sunny, warm Orlando, Florida at the ICR Conference. It's an annual event in which kind of consumer retail stocks present a lot of small and mid-cap companies, all kinds of companies. So 4 analysts are down here, as well as Greg, the master of media. And we're checking out a bunch of different companies, hearing from CEOs, CFOs, VPs, all that kind of stuff. And it's been pretty fun. So Andrew Hall here, Ben Nye, and we're going to jump in and just give you a quick update through the morning. First company I heard from this morning was SpartanNash, so a grocery distribution company. They do own a few grocery stores, but 50% of their revenue just comes from the distribution side. It's not just food. It's everything you can find in a grocery store. If they distribute it, you're going to find it in those stores. So they've got 19 different distribution centers, but 50% of their revenue from distribution, 25% from military commissary, which is a super interesting business. And they've even got private label, like a military brand called Freedom's Choice. And then also another 25% coming from their actual grocery stores. The big thing I thought from an economic standpoint is they were talking about inflation and food inflation, and their target number there is 1% to 2.5%. And when you think about a grocery business where not only are they not the grocery store, they're just the distributor, kind of a middle person, middleman, middle woman, whatever you want to call it, a 1% inflation rate versus a 2.5% inflation rate could really make or break a company. So kind of a wide range there, and in general, we're not seeing a lot of inflation.
No, we're not. I mean, that's something that we saw from Sysco as well. So we both sat in on the Sysco SYY presentation as well. They said that their formula for reaching growth is actually coming in a lot different than what they actually had anticipated earlier. They were looking for a little bit more inflation, a little bit more pricing on some of their sales, and now they're saying that the way they're going to hit some of their earnings estimates is really by cutting costs, specifically on the administration side. So they're starting to see some margin compression from higher costs and not being able to push that through to consumers, but they're going to try to cut those through the administration, which I thought was interesting. And there just wasn't a great positive vibe from at least Sysco. I don't know what SpartanNash had to say.
No, I agree on the Sysco thought especially. SpartanNash was an interesting business model. The commissary business is very interesting to me. But with Sysco, one thing that alarms me is they're basically 5 quarters into a 3-quarter kind of overhaul strategic plan, things like that. 3 years, excuse me, 5 quarters into a 3 year. So they're 5 quarters in on this out of 12 quarters, and it seems like they're really, really adjusting expectation. Another company I heard from today was Zagg. So Zagg is kind of an interesting company. We've actually held that at different times for client portfolios, specifically more aggressive, more risk tolerant clients. Certainly not in a large amount, but every once in a while we'll nibble at it. But they make a lot of brands that you would be familiar with. Mophie, which is the self-charging phone cases. They also make the screen protector. They're number 1 or number 2 kind of in every kind of mobile device technology space, but they're doing it all through acquisition. So they've made a number of big acquisitions. Thought the one that was most interesting actually was recently they picked up, I'm totally blanking on the name, Gear 4. So they're the largest protective mobile device case company in the UK. So they're going to really try to penetrate that, because again, most of what they've done has been in audio, it's been in battery life, it's been in screen protection. So kind of an interesting concept, but they're really going to be totally dependent on acquisitions.
Yeah, and I think that was kind of a theme that emerged throughout the presentations. Acquisitions was a theme. I think pricing was a theme. Lack of pricing was a theme throughout the presentations that we've seen so far. Another company that is experiencing acquisitions and acquisition-related growing pains is Primo Water, and that's a conference I just got out of. Primo Water basically sells in-home water dispensers. So think of the ones
like the faucet.
Yeah, like think of your classic water cooler. They sell those, doll it up a little bit, and put it in your home. And so that's what they do. And they actually acquired Glacier, which is a brand that a lot of people know. And they're kind of working through that right now. So they saw a pretty good organic growth in their prior business, the one that they wholly owned. And then when they acquired Glacier, they've seen some real growing pains. They have a lot of debt. They actually did a stock offering to recap the balance sheet here last year. And they expect to be able to grow from there, and they're excited about the business. But a lot of these are just kind of like hope springs eternal.
Right.
And that certainly seemed to be the case for Primo Water. The other company that I looked at was Ascena. That was the first presentation that I went to, and that probably gave me the best macro view, at least for what they see, what's going on right now. Part of it's been colored by what has happened over the last 6 months. They saw some real issues in Maurice's. They saw some issues in, they also have Ann Taylor and Justice and Loft. And what's really given them pause for concern is Lane Bryant, but they're doubling down on that because they want to actually improve it. So it's a really different tone that I'm getting. If we pull back and go to kind of 30,000 feet, vis-a-vis last year, I've seen a marked downshift in just enthusiasm.
Yeah.
And so I don't know if that's what you've seen as well.
Definitely, and we talked a little bit before the conference about just different themes we thought we would hear about, and we even talked about making an informal survey that we just kind of split up and everybody answered these questions based on different management teams. And surprisingly, a number of topics that I thought we would hear more about haven't come in. You know, Sysco mentioned tax rate, but that's the only company I've heard from so far today that has actually mentioned the tax rate in any capacity, not just what they're using the tax, decrease the tax rate and what's that money going to. They're the only one that's even referenced it. So that's number one. Nobody said anything about Trump at all so far from what I've heard. So a lot of these headlines that seem to just dominate the news cycle. Certainly nothing from the trade war, tariffs, but I don't think we've heard from a company where that really would be impacted necessarily right now. But it's interesting, these big headlines, rate hikes, all that kind of stuff. We hadn't heard anything really about those things. So it's kind of interesting to hear where people are, but I definitely think a little bit muted compared to a year ago.
Yeah, and I think probably the best takeaway that so far, if you're looking at a macro basis, is that the Ascena CEO said, look, I think from everything I read, it looks like we're heading to a slowdown in the next 6 to 12 to 18 months. Their customers are mostly female, so they say she's going to be a little bit more careful about where she spends her money. So I think that's the biggest macro takeaway that I've seen so far.
Yeah, that's about it. We will be back throughout the day tomorrow, and even a little bit on Wednesday from the ICR Conference here in Orlando. Make sure to follow along. Lots of weed talk coming tomorrow, so that'll probably be a hot button issue, and we promise not to use any of it. We're just going to talk about it. So y'all have a great day. We'll talk to you soon.